Hey everybody, I'm JC Parets and I'm with allstarcharts.com. Shout out StockCharts TV for inviting me on. So welcome to the JC show, I guess is what it's called. And we do three things here. The first thing I want to do is make sure we have a lesson, right? Something I've probably had to learn the hard way, maybe something that came up in conversation this week, but for sure anybody watching, we want to make sure you at least learn something. And the second thing that we're going to do is talk about the markets, right? What are we looking at? What are we ignoring? What do we think is important? What areas should we be paying extra attention to? What types of stocks should we be buying? What types of stocks should we be selling, right? What are the big themes out there? Let's dive in and take a look at some charts. And then, of course, it's answer questions. So keep firing them in. We really appreciate it. We should do our best to answer them here, sometimes through the slides themselves and the charts that we talk about, other times at the end with some final comments to answer some questions. Shout out Guam. I don't know if you've ever been to Guam. Good times out there. All right, so first lesson of the day. I was talking with my good friend Paul Sienna yesterday, not necessarily talking to him. He was on the podcast, so you guys will hear it. It'll be out within the week. Paul Sienna is the chief strategist, technical strategist of fixed income commodities and currencies, right? So FIC for Bank of America Merrill Lynch. He's been there for about half a decade. And, he's one of my smarter friends. And actually, him and I were studying for the CMT together back in 2006. So we go way back. So shout out, Paul. Thanks for coming on the podcast. So I posed a question to him. I'm like, Paul, one of the things that I admire about you is, you talk to a lot of smart folks, right? Let's face it. You're constantly, PMs all over the world. And then prior to his position at Bank of America, he was at Bloomberg for a long time, about a decade, if I'm not mistaken. So again, talking to smart folks about technical analysis, about the markets, a lot of PMs, not just in the US, but globally. I'm like, what's something that you've learned through those experiences, through those conversations that maybe, a regular investor that might not have those conversations every day might not really truly appreciate. So that's how I posed the question. You know what he told me? He's like, JC, people really focus on the Fed and what the Fed is saying. He's like, if these investors just focus more, even a fraction of that time in price and price behavior as they did in what the Fed is saying, they would be way better off. And that caught me a little off guard. I mean, obviously I agree. I think that makes all the sense in the world, but it's interesting. Of all the things that he's learned, that's really what stands out. I don't know if it's like, recency bias because the Fed speaking this week or whatever, or if that's truly what stood out to him the most. But I thought that was fascinating. So the bottom line is a lot of people are always focused on what the Fed is saying. Why don't we focus at least some of that attention? We focus all our attention, but at the very least, try to transfer some of that attention into what price is actually doing and what the market is actually doing, right? That's how I look at that. All right, so let's dive in. So that's the lesson, right? Shout out Paul Sienna, shout out Bank of America, all of those things. All right, so why don't we take a look at the... So one of the things that I think has been on our radar, by the way, this hat, let me just show you guys, this hat was sent to me. I got it yesterday. I don't know who sent it to me. There was no card or anything. I got this hat, I got a t-shirt, I got some stickers. I guess I accept Bitcoin. Like if you want to send me Bitcoin, I won't say no. I don't really know how that works. Can I do that? Can you just send people Bitcoin? I don't really know how that works. But anyway, I guess I accept Bitcoin. I thought it was a cool hat. So thank you to whoever sent that to me. Really appreciate it. Thank you. I can't thank you because I don't know who did. I don't know if it was somebody at the firm kind of made a joke on me or something. I don't know. Because I haven't been long Bitcoin. I've been long the Ethereum. So I don't know. Anyway, so one of the themes that we've had this week for sure, not just this week, but we've been talking about it for some time, is this whole year two thought process, right? Year two of a bull market cycle. Last year was a big move. It reminds me a lot of, what we were seeing in 2009. You can see here, right? Here's a low in 2009, major thrust off those lows, and then a sideways chop into 2010. What about 2003, off those 2003 lows? Look at that thrust higher. This is after the dot-com bubble. And then that sideways churn in 2004, right? That year two chop. Similar to 2009, right? And 2010, year two chop. How about 83? So here's JC's born in 82. Stock market bottoms. Coincidence? Maybe. Maybe not. But either way, market bottomed in 82. Got the ripper into 83. And then chop, right? We've seen it before. About 74 off that key low. That was the low. Ripper into 75, and then chop, 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 right? The one common denominator between all of these is that all of them did not prove to be an epic top. It was messy and choppy, as you can see here. 75, 75, 76. Look at 84, 04, 2010, right? They all look similar sort of setups. And then here we are. Here's that first thrust off the 2020 lows. What's next? Is this like those other ones? It certainly appears to be, right? That's what we've seen, right? We've seen some bid out of the defensive areas, yen, bonds, gold. They all stopped going down, you notice? High beta underperforming. Haven't seen high beta underperform in a long time, at least a year. Small caps underperforming, right? Staples, utilities, REITs, they've been the leaders, you know? When was the last time they were, REITs were breaking out, right? So new things to say the least. And if you're interested in these slides, you want to send it over, make sure to email info@allstarcharts.com. Make sure to use the password year 2. If you don't use the password, then Peter's going to send you some other slide deck maybe. I mean, you're not interested in that other one. You want this one. So the password is year 2. Make sure to include the password year 2. All right. So what else is going on that draws our attention to the current markets? The S&P 500 is hitting its 161.8% Fibonacci extension. As we discussed last week, so did industrials, S&P industrials. So did the global Dow index, right? So a lot of key levels. And if markets are going to consolidate, S&P as we speak is at right around 4190 or so. So it's holding above these levels, which is impressive. Just don't know how much I trust it, right? Classic year 2 behavior, says churn, but just because we've seen that seasonal, sort of cycle work in the past doesn't mean it's going to work now. That's just sort of to set the framework as to what can happen or what's been happening. Right? It's how I look at it. And then when you look at the amount of new 52-week highs, or lack thereof, the S&P 500 doesn't tell the whole story. Look inside. How many of the stocks in there are making new highs, right? Fewer and fewer, that's for sure, right? So it's a market of stocks, and it's been a messy sideways market underneath the surface. A lot of people are looking at their portfolio, and you could be like, oh yeah, for sure, it's been a mess. This S&P 500 breaking out to new all-time highs doesn't tell that story of the internals. I think you guys watching would agree. In other countries, you might disagree, but Americans in particular, with this home country bias and a lot of the exposure in American portfolios, it's been messy. Large caps making new highs, small caps are not, right? Neither are micro caps, right? Underperformance, haven't seen that sort of thing in quite some time. We talked about the high beta versus low volatility also underperforming, right? So this high beta, which had been a high beta, it had been a beta chase all the way up off the lows, right? As you can see here, lows in S&P, high beta really started that outperformance. But now we're not seeing that, right? Again, something different. Here's real estate. Real estate breaking out to new all-time highs, which is great, good for real estate. On a relative basis, also looking to break out, right? Haven't seen that sort of leadership in some time. As part of the sector rotation, it doesn't mean that the market's going to come, the world's going to come to an end, right? And that's the whole thing here. They're stocks at the end of the day. You look at a chart of the consumer staples sector index and you overlay the S&P 500, they look the same. Granted, staples underperform when the markets are doing well and staples tend to outperform when the market's doing poorly. But when you zoom out, they go up and down together. And why do staples do well when stocks are doing well? Because staples are stocks too, right? So think of it like that. It's the outperformance that really stands out. But if stocks in general are going to go up, there need to be times in that bull market where REITs take over leadership and staples and utilities and healthcare, right? We're like, is healthcare defensive or not? It's like healthcare is like it's its own thing, its own genre. But needless to say, these are areas where that needs someone outperformance. Some of the other areas like technology or consumer discretionary, that have been leadership in the leadership sectors in the past need to take a break. And that's just that sector rotation is part of a bull market. But part of that sector rotation tends to coincide with a more defensive rotation. Indexes themselves probably don't do great. Most stocks themselves probably don't do great. And that sort of messy digestion of last year's gains, which, by the way, over the last 12 months have been the best returns for stocks in 75 years. So not only is a digestion warranted, it's certainly not unprecedented. In fact, it's perfectly normal. In fact, anything else would actually be abnormal, right? If this didn't look like 2010, if this didn't look like 76, if this, right? If it didn't look like those, that would be strange, right? Just to be clear what's happening, right? So needless to say, bonds catching a bid, right? So bonds catching a bid, they, not a huge bid, right? Let's see where we're at today on bonds. Let's see. Not a huge bid, but they're there, right? They stopped going down. It's really, step one of going up is you got to stop going down, right? So I got an interesting options trade. Let me get me out of the way here. It's an interesting options trade that our chief options strategist, Sean McLaughlin, came up with. So it's a short strangle, TLT short strangle. So what we're going to do is we're going to be selling the TLT June 133, 144 strangle for around 220. So 220 credit. So we're going to be naked short an equal amount of the 133 puts and the 144 calls. So short the 133 puts, short the 144 calls, and essentially betting that TLT is going to stay in that range and we're going to be able to collect that credit or half of the credit, right? Because as soon as we can get half of what we can potentially gain, we're going to take that trade off the table. And here's the risk management. If at any time TLT closes below 133, which is the short strike, or above the 144, also short that strike on the calls, that's the signal to exit. So at any point, it closes below 133 or above 144, all bets are off, right? So 133 and 144. Anything below those levels or above 144 and all bets are off. Because remember, there's an unlimited amount of risk in this particular trade, theoretically. Unlimited amount of risk if you just don't do anything, right? So obviously, these are options, strategies, and trades that need to be monitored. Again, 133 and 144. If it gets on either side of those envelopes, all bets are off. Now, what else is happening? What else is happening is that agricultural stocks are ripping, right? Granted, lumber is in this index, but so is corn, beans, bean meal breaking out, wheat breaking out, right? The ags absolutely ripping, which is part of that whole commodities theme. 17 bucks is the level here for DBA. This level goes back years. I've been talking about the 17 level since 2018. 17 is the level. If we're not above 17, you can't own the DBA. You can't own it. But if it's above 17 with a target of 22.50, makes sense to me, right? Playing for that to close this gap right here, right? Back to that former support, former resistance, right? There's a lot of market memory at 22.5. So many times I've seen this before. It acts like a magnet. So we only want to be long the DBA if it's above 17, target 22.50. Now in the currency market, I think it's interesting. We've seen that dollar strength from the first quarter. Recently, that sort of changed gears a bit here. Let's see where we're at today. So dollar sort of kind of flat today. But certainly strength in the first quarter. That's waned so far in April, right? So the dollar's been down this month. But even before that, you could really see the strength, you know, with the weakness in yen that got slaughtered, Swissy, Euro, British pounds. Look at Aussie and CAD, right? Really saw that strength, particularly in Canadian dollar. So you're getting that commodity exposure, no doubt. So anyway, that's the framework of where we see the market overall, kind of messy. I think we need to be really, really careful with the types of things that we own. I think really careful with what we own. We want to be in relative strength, right? The names that are not succumbing to the selling pressure, right? Succumbing, is that a word? Succumbing? Sounds like a word. It's a word now. So let's take a look at some of these names. First of all, this week we dropped the 2 to 100 club. Shout out to the 100 club. So what we're doing here is that we are looking for the next $100 billion companies. And now in order to be in our universe, you need to be in one of a series of sectors and industry groups, I should say, not so much sectors, but industry groups that we feel can scale and go from 2 billion to 100 billion, right? So you're not going to find utility stocks in here, right? Those types of names are not going to be able to scale from 2 billion to 100 billion, not anytime soon anyway. We want the ones that are going to do that now. In fact, the exact question is we want to know which ones are going to be next. So think solar, medical equipment, biotech, right? Think about software, cloud computing. These are the types of names that can actually scale to that degree. So we're looking, when you get above 2 billion in market capitalization, you graduate from small cap and into mid cap status. So that's when you enter the 2 to 100 universe. And we're looking at about 30 to 35 billion on the upside, right? So it gives us plenty of time to get involved below it before 35 billion so that we can get a nice chunk on the way to 100 billion and beyond. We actually broke that rule this week. We're actually adding a $50 billion stock because we just couldn't help ourselves. And goddamn, our rules are meant to be broken. If we want to add a $50 billion stock into our portfolio this week and break our $35 billion threshold rule, then so be it, damn it. So be it. So we're breaking the rule today, just FYI. These are the types of rules you can break. The risk management rules, don't break those. But when it comes to universes, don't worry about it. We added for the minor leaguers report that's we'll get into in a minute. Small caps, we added like a $900 million company that we broke the rules, and that worked out well. So no problem. All right. So from the 2 to 100 club. So this is the universe, by the way, right? So the first thing we want to do is build the universe. And then we sorted by proximity to new highs, which is really telling us where the relative strength lies, right? A lot of these industries are not making new highs. So the fact that these stocks are in that environment is bullish. It's by definition relative strength. So by sorting by new highs, it's probably a good way to find some of these names as they're breaking out. So here's a $5 billion UK software stock, Endava. I don't even know if I'm saying that right. Endava, ticker symbol DAVA, D-A-V-A. Beautiful uptrend. Talk about relative strength. I mean, look at the 2020 highs. We're nowhere near that. We're way beyond those levels. REITs are breaking out above their 2020 highs as we speak, just to put things in perspective. So let's call it 89 bucks. 89 bucks on Endava, D-A-V-A. If we're above 89, I like it long with a target of 130. If we're not above 89, we cannot be long the stock. Can't be long the stock if we're below 89. Because if we're below 89, then that means that we're probably still stuck in this range. And who wants to own that? Right? But with relative strength looking strong, not just in the bigger picture, but short term as well, positive momentum, pushing up against new highs. What's there not to like? Especially if it's above 89. If it's not above 89, I don't like it. But above 89, I like it long with a target of 130. It's a mid-cap, $5 billion UK software stock. And then let's talk about Globant, G-L-O-B. Look at the relative strength. Looking to break out of a nice year-long base here, or not year-long, maybe 7-8 months base. $9 billion mid-cap. This is a software stock from Luxembourg. 235 is our level here. Look at this base throughout the year. 235 is the level there. If we're above there, I like it long with a target of 335. Now, if we're below 235, we cannot own it. Cannot. Because that means we're still below this overhead supply. So that means we can't own it. But if we're above 235, I like it long with a target 100 points higher. Doesn't always work out that way, but this time it does. 100 points higher is the target. All right, another scan that dropped this week. This is the minor leaguers report. What we're doing here is we're scanning the farm system. These are all $1 to $2 billion market cap stocks. So as soon as you get above 2 billion, you are now a mid cap. And below $1 billion, hard to take you seriously. So above $1 billion to 2 billion before they graduate mid cap. Talk to any of the old timers, they'll all tell you best stocks, best winners of all time come from mid caps. So what we're doing here, as we always do, try to stay one step ahead of the curve, scout the farm system for the next mid cap stocks. And then because we're not trying to scale to 100 billion, we're only looking for a few billion, that's still a 2-3 bagger potentially. We can open it up to any industry group. So you'll find a lot of banks here, right? Particularly more recently, household personal products, packaged foods. You're going to find stuff here that you're not going to find in the 2 to 100 club. Needless to say, great scan. Always find some interesting stuff here. This is Systemex, excuse me. This is an industrial stock, $1.6 billion small cap. These are all small caps. So this is $1.6 billion. So they're all between 1 and 2 billion. Look at the relative strength making new highs. And I just love this multi-year base, right? What's there not to love? So 46.5, let's give it a little room, give it plenty of time to break out. 46.5 is our level there. If it's above 46.5, I like it long. If we're below that, I do not like it long. So only above 46.5 with a target of $66 per share for Systemex. And then here's Community Healthcare Trust, is a $1.2 billion small cap REIT. So there's a small cap REIT. As you'll notice, you're not going to find a lot of REITs in the 2 to 100 club, but in the minor leaguers report, you will. So this is a $1.2 billion small cap breaking out on a relative basis. By the way, it pays a 3.2% dividend yield. Healthcare facility, CHCT. And just look at the 2020 highs. Boom, boom, boom. It's only polite to knock on the door a few times before you go barging in, and that's what we're seeing here. $52 is the level. If we're above 52, I like it long with a target of 72. So $20 to the upside. Only like it long if it's above 52. What about a little cryptocurrencies? You guys buying these cryptos? Look at this hat. You guys like the hat? I thought it was kind of cool. I wish I knew who sent it to me. I don't know who sent it to me. If you did, thank you. Appreciate it. My wife probably doesn't. She's like, that hat is so ugly. I kind of like it. Kind of nice. Wear it to a Steelers game. They'll think I'm a Steelers fan, right? So I think it's really important to understand, number one, what type of market environment we're in. I think the weight of the evidence continues to suggest it's a messy market within the context of an ongoing structural bull market, most likely year 2. So if we're going to be buying stocks, first of all, there's nothing wrong with cash. In fact, cash heavy has paid nicely in recent months. There's nothing wrong with cash. And I think that if we're going to be buying stocks, I think we need to be looking for strength, right? Rather than focusing on the stories, not that we focus on stories, but I know some people do. Don't worry about the stories. See if the other people already believe that story and see if they're acting upon that story. If you're obsessed with the story, right? See if others also agree with you, because if they don't, then you're wrong. Or you're wrong for now anyway, meaning you're going to get chopped up when you could be doing something else. You could be in something else instead of getting chopped up in something. So you might have the greatest story of all time, but unless the rest of the market agrees, it doesn't matter, or just wrong. So I think we wait for the market to start agreeing that that story sends the stock higher, right? And we do the opposite. We look to see which stocks the market is agreeing are going higher and maybe look at the story afterwards. I know Straza does. I don't really care. I mean, sometimes it's kind of interesting, but it's not going to make it's not going to factor into our decision making. It's just kind of cool. Oh shit, they're sending people to space. That's cool. You know, I like to know that sort of thing, but it doesn't really matter at the end of the day. All right. So anyway, that's my spiel on that. So why don't we talk about the old cryptocurrencies, right? You guys trading cryptos out there? So Ethereum ripping, right? New highs as we speak, if I'm not mistaken. Let's see. Let's punch this baby up. Let's see. Ethereum making new highs, 2720 I got here. It's the highest level ever. And what do we know about new all-time highs? What do we know about it? We know that it is not a characteristic of a downtrend, right? You don't see a lot of new all-time highs in downtrends, right? Go back to the best downtrends ever. Tell me how many new all-time highs you see. You're not going to see a lot. People are like, well, JT, every downtrend starts with a new high, right? All right, bro. You live your life like that. No thanks. So anyway, new all-time highs for Ethereum. Tremendous outperformer over Bitcoin this year. And then gold still down in dumps. Nobody wants it. Nobody wants the gold. And don't blame me. People are like, JC, why are you picking on gold? I'm not picking on anything. I don't really give a damn. I don't care. Right? Just nobody wants gold. What do you want from me? It's not my fault. Right? People are like, oh, JC. It's like, what? Do they want it or not? They obviously do not. They obviously want Ethereum. That's for sure. The market is a voting mechanism, right? It's not my opinion. I don't really care either way. Gold could go to 1 million or 0. It doesn't matter. Same thing with Ethereum. It can go to 1 million or 0. I own a bunch, so I hope it goes to 1 million. But if we start breaking below 22.5, 2200, all bets are off. You know, I was wrong. What are you going to do? I've been wrong before. I'll be wrong again. I promise. I absolutely promise. The one thing I guarantee you guys is that I will be wrong in the future. I might be wrong right now, right? Ethereum, literally, as I'm saying this, could just go crashing down. It could do that. That's not the bet I'm making, but I'm certainly open-minded to it. I mean, oil traded below 0, for goodness sake, last year. I mean, anything can happen. I mean, who had that? Did you have that oil was going to 0 last year? I didn't, you know. So if you had it, kudos, but I don't think you did. The point is, the market could do things that we didn't expect. So nothing really surprises me anymore. Can Ethereum just go to 0 tomorrow and this was the top? Absolutely. But I'm betting it's not that. I think we go to 3,600. That's next. Right? It's been the target. I see no reason to change that. Still like it. By the way, if you're interested in these slides, you can go to email info@allstarcharts.com. Make sure to use the password year2. Make sure to use the password. Don't forget to use the password year2. use the password year 2. All right, let's have some questions. JC, how high can Ethereum, we were actually just talking about Ethereum. How high can Ethereum go after 3,600? That is a great question. Let's pull up our, you'd think that I'd have that off the top of my head, and I do not, because it's not really relevant right now, but now that you mention it, let's go see. All right, so the next target after, and I'm gonna actually show you because we have the technology to do this. Let's see. Boom. Let's see. Come on, Jay. Let's see. Boom. That was pretty fast. All right, so let's take a look. So here's Ethereum zoomed out. So this is the chart that we were just looking at. You can see the target, 3,600 is next, right? Those are the extension levels. And by the way, go to allstarcharts.com/Fibonacci, and I lay it all out, how these levels are calculated, all these things. So these were the high in 2018. These were the lows, double bottom-ish. Got back to those highs, broke out, retested, off to the races. Next target is the 161.8% extension of that entire base, right? And the next target is the 261.8% extension. Again, go to allstarcharts.com/Fibonacci, and I lay it all out there, why these levels, why we're looking at these levels and not others. So now if you zoom out even further, here's that high from 2018, the low, double bottom, breakout, retest, get to this level. 2250 was the first target, 3,600 is next. Then we're looking at 5,700 and then 9,200. So this is where JC gets the boat, right? This is where JC gets the boat. It's like, babe, I just got us a boat. Really? Do we have to name it Ether? Etheria? Because boats have to be female names, right? So it would be like Etheria or something like that. This is where JC gets the boat. I don't know. I'm not really worried about that right now. Can it get there? Sure. Probably will. I hope it does. I think that'd be cool. Just kind of as a market participant. I hope I own it that whole time too. But just kind of in reality of the matter is 3,600 is next. All right. And let's see how the market reacts there. I would argue that the way it's reacted to 2250 has been very bullish because it's practically ignored it. Right? I would say that's very bullish. So let's see how it reacts at 3,600 and then we'll reevaluate there. But that's where I think we're going. So if you're interested in the slides, info@allstarcharts.com, password year 2. And then just some final thoughts. I've really been thinking a lot about, who I surround myself with, who I talk to. And I think I take it for granted a lot, really just how intelligent and, connected a lot of my friends are. Sometimes I use that to my advantage. I find other times I might not as much as, right? But I've really come to appreciate it more, thank them more, be like, dude, you're the man. I really appreciate this conversation. And it's all kinds of stuff, particularly stuff I know less about. Like, I've been talking to Meltem Demirors about cryptocurrencies, or Justin Paterno about NFTs, or Neil Blaylock about agriculture, or David Cox about Canada. And yesterday I was talking to Paul Sienna about Forex markets and commodities. And every single one of those conversations, I'm learning something. And then I get to share it with you guys, right? Be like, hey, so I was talking to this guy yesterday, or hey, I was talking to that gal yesterday, or whatever. And I get to share it with you guys. So I do my best to try to pass that on. I'm not reinventing the wheel here. Nothing you see here I invented. These are things that I learned from my colleagues, my predecessors, and I hope to continue to learn. So anything cool you see out there, fire it over. info@allstarcharts.com. And if you're interested in the slides, make sure you use the password year 2. Thanks, folks.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.